Ayubowan. In this video, I am going to explain how to fill statement of estimated income tax payable, commonly known as set form for the year of assessment 23-24. This presentation consists of introduction, general instructions, instructions to complete the statement, calculation of income tax quarterly installment payable, penal provisions, and examples. You may be an experienced taxpayer who has filed set form for previous years of assessments. Otherwise, you may be a person filing the set form for the first time from the year of assessment 23-24. However, I hope this explanation will help you in filing your set form correctly. Set form is a form that calculates the estimated income tax payable for the year of assessment. If a person derives or is expected to derive an assessable income during a year of assessment, the estimated income tax payable for the year of assessment shall be calculated and such income tax shall be paid in quarterly installments. This assessable income is mainly based on the estimated amounts as the relevant year of assessment is not yet concluded. The relevant 12-month period for this year of assessment is from 1st April 2023 to 31st March 2024. After calculating the estimated tax payable, such person shall pay first income tax installment to the department and the said form is required to be submitted along with such first installment payment on no before 15th August 2023. I request you to carefully read the instruction for completion the said form, as such instructions provide all the details required to file said form like general instructions, method of payment, method of calculation of net quarterly installment, applicable qualifying payments, penal provisions, etc. General instructions. Submission of set. Completed set could be hand-delivered or sent through registered post to the Central Document Management Unit, that is CDMU, at the head office of the IRDO to any regional office. Other than individuals, online submission is acceptable. Payment of quarterly income tax installments. After calculation of the payable income tax quarterly installment, the first installment should be made on no before 15th August 2023 and the second installment should be made on no before 15th November 2023 and the third installment should be made on or before 15th February 2024 and the fourth installment should be made on or before 15th May 2024. For the payment of these payments, paying slips are posted to the taxpayers and others, they can also be collected from the Customer Supporting and Promotion Unit at the IRD head office and from all regional offices and from any branch of the Bank of Ceylon. That payments should be made to any branch of Bank of Ceylon or through online tax payment platform. Okay, this is the set form for the year of assessment 23-24. I think you can see this form. Now we are going to fill the set form. Instructions have already been provided in the IRD website, so you can read those instructions carefully. First of all, you have to select the statement type. Your statement may be original statement or revised statement. You have to tick it in the relevant cage. If this is an original statement, you have to fill it in the original statement cage, and if it is a revised statement, you have to fill it in the revised statement cage. Original statement is a statement that you file at the first time for the year of assessment 23-24. If you need any further revision for that original statement, you can submit a revised statement. Then you have to select the income tax type. If you are a corporate income tax payer, then you have to tick on the relevant cage, and if you are an individual or a partnership, you have to select the relevant cage provided in the set form. This set form has 3 parts. Now we are going to fill the part 1 of the set form. It is for the calculation of estimated tax payable. First of all, you have to categorize all your income into these 4 sources. Then you have to declare those income under cage 10, 20, 30 or 40. In this case, business income means estimated assessable business income, and investment income is also an estimated assessable income from investment, and the employment income means estimated assessable income from employment. After that, you have to aggregate those income and you have to mention that amount under page 50, that is estimated assessable income. Then you can deduct estimated qualifying payments. That means not only the qualifying payments made up to the date of submission of the said form, which you have expect to donate during this year of assessment, also can be deducted under this estimated qualifying payments. That means under page 60. Not only that, you can deduct estimated reliefs under page 70. Finally, you will receive estimated taxable income, that is in page 80. Then you will have estimated tax liability under page 90. Finally, you can deduct foreign tax credits if available and estimated advance income tax, that the amount deducted by your employer and the amount will be deducted by employer. That means estimated advance personal income tax for the total year of assessment can be deducted under page 110. Finally, you will receive estimated tax payable, that will be under page 120. This is the part 2 of the said form, that is computation of estimated tax payable. If you have more than one business activity, you have to mention that activities separately. If you have more than one business activities and if that activities are taxed at different income tax rates, then you have to mention those activities separately in this form and relevant tax rates as well. Finally, you will have estimated tax liability under page 90.1. This is the part 3 of the said form. This is declaration part. If this said form is prepared by an approved accountant or any other person for a payment, then you have to fill this part. You have to mention yes in this case. If you have filled this form your own, then you can say no. If this is yes, then you have to fill the details of that approved accountant or any other person who helps you to fill this document or who prepared this document on behalf of you. Then part B is for the declaration. That part should be prepared by the taxpayer. All details of these required details of this taxpayer should be mentioned here, and the taxpayer should sign in the relevant part. This is the statement of estimated tax credit schedule. That means all the credits you have deducted in your said form should be mentioned here. Your TIN, your details and everything you have to mention, and the tax type, if you are a CIT, IIT or PIT, so you have to separately mention who you are. This credit schedule will help you to calculate the net quarterly installment payment. Then these are the details of the credit schedule. If you are a partner of a partnership, the amount of the tax deducted by the partnership should be declared under page 20. That means the amount already deducted can be mentioned here, and the cumulative withholding credits prior to the due date for payment of this installment also can be deducted. Under this credit schedule, you can mention only the amounts you have the withholding agents have already deducted, and the cumulative AIT credits prior to the due date for payment of the installment also can be deducted under page 40. Finally, the declarant's details should be mentioned in this credit form. Okay, now we are going to calculate the income tax quarterly installment payment. For the purpose of this, we can apply the formula given in the Act, that is A minus C divided by B. A means estimated tax payable. The amount declared in page 120 should be considered for the A. I will briefly explain about the estimated tax payable. To calculate the estimated tax payable, that is A, several steps should be considered. The first step is, in calculating estimated tax payable, is to classify the estimated income received and receivable during the year of assessment to the relevant source of income. The second step is to calculate the estimated assessable income and taxable income. Finally, estimated tax payable can be calculated by applying the relevant tax rates to the duly calculated estimated taxable income. After calculating the tax payable amount, what we have to do is, we have to deduct estimated advance personal income tax deducted and deductible for the year of assessment. You can calculate that estimated advance personal income tax using the tax tables, APIT tax tables provided in the IRD website. For the regular profits, you can apply table 1, and for the secondary employment, you can apply table 7 for the calculation of this estimated APIT. After deducting that estimated APIT amount, you will receive A, that means estimated tax payable. Then B is number of installments remaining including the current installment. C is tax payments prior to the installment, that means previous installment payments, withholding tax payments and advance income tax. Tax payments made by such person prior to the installment can be deducted under C. Accordingly, payments made in the previous installments and withholding tax or AIT deducted by the withholding agent can be deducted. However, deduction of advance payments made by such person is not allowed at this stage. That means that amount, the advance payments paid by the taxpayer, should be considered under F. These are the number of installments payable during the relevant installment. That means if you are going to pay for the first installment, then B will be 4. If your payment is for the second installment, the B will be 3, and for the third payment, B will be 2, and for the final payment, fourth payment, B will be 1. This is the calculation of net quarterly installment payment. For the calculation of net quarterly installment payment, you can deduct F. F means advance payments of quarterly installment payments. Advance payments means any payment made by prior to the relevant installment by the taxpayer. Then you can deduct share of the installment paid by the partnership for partners of that partnership. Now these are the penal provisions. Penal provisions are provided for the late filing and non-submission of the set and submission of incorrect or misleading set. If it is a failure to submit the set, then penalty will be up to 1 million. If this penal provision is for the submission of an incorrect set, penalty will be up to 25% or 75% of that underpayment. And if the penal provision is for the submission of misleading set, the penalty will be minimum 50,000. If this is a willfully or misleading set, then fine will be up to 1 million or to imprisonment for a term up to 1 year or both of such fine and imprisonment. Penal provisions also provided for the non-payment, late payment and underpayment of the installment payments and evading of installment payments. For the non-payment, late payment and underpayment, penalty will be up to 10% of the amount of tax but not paid. Willful evading of installment payments, the fine will be up to 10 million or imprisonment up to 2 years or both. And for the interest on underpayments will be 1% per month or part of a month on default amount. Let's move to an example. Mr. Karunanayaka is the Chief Financial Controller of the company, KDT. His expected income for the year of assessment 23-24 is as follows. Employment income 6.6 million, that is 550,000 per month. After multiplying it by 12 months, then the yearly income is 6,600,000. We can consider this as a primary employment. Then gross interest income received on 1st of May 2023, the amount is 2.2 million. AIT has already been deducted at the rate of 5%. For the purpose of set calculation, you have to consider both the interest income received and receivable during the year of assessment. If it is received amount, then AIT could be deducted. If it is receivable, AIT will be deducted in future. Then business income 5 million. For the purpose of this set, we have to calculate the business income, that is assessable income from business. So in this case, we assume that this 5 million is after deduction of the allowable expenses, and this is assessable income from business. Then he has donated 250,000 to purchase equipment for eye surgical unit of the National Hospital during the year of assessment. It will be a qualifying payment, but for the consideration of the qualifying payment, not only donated amount, but the amount expected to donate during the year of assessment also can be considered. In addition, Mr. Karunanaka has installed solar panel to his residential place, which is connected to the national grid at the cost of rupees 750,000. In this case, Mr. Karunanaka has already been installed the solar panel. If a person who has not yet installed but expect to install in future during this year of assessment also can be considered for this relief. Okay, now we are going to calculate estimated taxable income. Employment income 6.6 million per year of assessment. Estimated business income 5 million. Estimated investment income, interest 2.2 million. Then estimated assessable income 13,800,000. Then this person can deduct the applicable personal relief, that is 1.2 million per year of assessment, and in addition to that, he has already invested the solar panel, so that amount can be deducted up to 600,000 per year of assessment. Then in addition to that, he can deduct qualifying payments. He has donated to the National Hospital, so he can deduct full amount, that is 250,000. Then the estimated taxable income will be 11,750,000. Now we can calculate the estimated tax payable. So we can apply the relevant tax rates to that estimated taxable income. So we have 500,000 slabs. For the first 500,000, we have to apply 6%, tax is 30,000. For the second 500,000, tax rate is 12%, that is the tax is 60,000. For the next 500,000, applicable rate is 18%, tax is 90,000. For the next 500,000, applicable tax rate is 24%, then the tax is 120,000. And next 500,000, we have to apply 30%, the tax is 150,000. Finally, we have to calculate 36% on balance taxable income. The tax is 3,330,000. Finally, we will have estimated tax liability, that is 3,780,000. From this amount, we can deduct estimated foreign tax credits if available. In this case, we do not have that amount, so we can deduct on the estimated APIT credit. You have to separately calculate the APIT credit estimated amount. In this example, estimated APIT credit is 1,494,000. After deducting that amount, estimated tax payable A means 2,286,000. Now we can apply relevant amounts to the formula. So A is 2,286,000. We have already calculated that amount. Then we can deduct C. C means AIT credit deducted by the withholding agent, that is 110,000. Since this is a first installment, the number of installment is 4, so we can deduct the amount from 4. The first installment payable is rupees 544,000. Let's move to the example 2. Dr. Vasumati is a surgeon at the Karapitiya Teaching Hospital. That means she has an employment income. She is an employee of this Karapitiya Teaching Hospital. Then also she maintains her own medical center. That is a business. In addition, she engages in private practice, but her monthly income from private practice never exceeds 100,000 per month. That is also a business income. Her expected income for the year of assessment 23-24 is as follows. Employment income including estimated cash and non-cash benefits, that is 9,200,000. In this example, Dr. Vasumati has only primary employment, no secondary employment. Then the business income, she has two businesses, her own business medical center, and she provides service to a private hospital. Expected business income for the year of assessment is 31 million, that is from her own medical center, and income from private practice is 500,000. For this 500,000, 5% withholding tax is not deducted because her business income is less than 100,000 per month. Therefore, with 5% withholding tax has not been deducted. And gross interest income received on 1st of June 2023 amounting to rupees 5 million, and AIT has been deducted at the rate of 5%. In this example also, this Dr. Vasumati received interest income prior to the first installment payment. If she will receive interest income during the year of assessment after the payment of first installment, then that amount also should be included when she is calculating her assessable income from investment. Then rent income is rupees 900,000. We assume that this rent income is received from a family. Then also she expected to donate 200,000 to an approved charity. Not only the donated amount, expect to donate amount also can be considered for the qualifying payment because that is also estimated amount. Tax payment made prior to the first installment is 250,000. We consider this amount as an advance payment made by the taxpayer. Therefore, we have to consider this amount under F. Now we are going to calculate estimated assessable income and estimated taxable income. Employment income from the primary employment, that is 9.2 million, and business income 31,500,000. Investment income from interest, that is 5 million, and rent income, that is 900,000. Total investment income is 5.9 million. Total estimated assessable income is 46,600,000. From that amount, Dr. Vasumati can deduct reliefs and qualifying payments. Personal relief for the year of assessment is 1.2 million, and since she has a rent income, she can deduct 25% as a rent relief, or she can deduct estimated expenses which she is going to deduct for the repair and maintenance. If either she can deduct actual repair and maintenance expenditure or 25%. Actual means estimated repair and maintenance expenditure or 25% from the total rental income. The amount is 225,000. Finally, she can deduct qualifying payments, that is the amount donated to the approved charity, that is 75,000. Then estimated taxable income is 45,100,000. Then we are going to calculate the estimated tax payable. After applying the relevant rates, estimated tax payable will be 15,786,000. Finally, she can deduct estimated APIT credit, that is only from the primary employment. Amount is 2,430,000. Then the estimated tax payable will be 13,356,000. That is A. This is the table for the calculation of estimated APIT. Since she has a primary employment, we can apply the formula provided under table 1 of the APIT table. Under table 1 there is a summary table, so she can apply the formula in the summary table. After applying the summary table, estimated APIT for the year of assessment will be 2,430,000. You can find out these APIT tables from our website for the calculation of estimated APIT. Then we are going to calculate net quarterly installment payment. Prior to that, we have to calculate the quarterly installment payment, that is E. To calculate that amount, we can apply calculated figures to the formula. So, A means 13,356,000, C means 250,000, that is the amount deducted by the withholding from the interest. Then we can deduct the number of the installment, that is 4. The amount will be 3,276,500. From this amount, we can deduct F. F means advance payments made by the taxpayer. So, the amount paid by the taxpayer, advance payment is 250,000. After deducting that amount, quarterly installment payable net amount will be 3,26,500. For further instructions, please refer the instructions for calculation of statement of estimated income tax payable in IRD website. Thank you very much.